Kenneth, how are you?
Good and you.
Doing good. Sun's starting to come out a little bit, so excited about that.
The warmth is finally on its way there, I believe.
It's on its way. We've had some good days, but days like today, I think it's about 50 something, so not exactly warm.
Okay. Yeah, winter has finally showed its face outside of the world.
Yeah. You guys don't get very cold where you're at though, do you?
I suppose it depends on who you ask. For me personally, it's bearable.
How cold does it get there? Like on a cold winter night for you?
Um, so obviously it depends on which province you're in, but
Yeah.
I've, I've stayed in Joburg and the coldest it's gotten is -12 Celsius.
Wow.
Yeah.
Okay, so that's pretty cold. That's pretty cold. That's
Yeah.
pretty cold. Well, good. So Tanith helps us with all kinds of stuff. She's actually out of South Africa, so we love having her with us. And I know she's been a super help to Robert and the team. And so those of you that haven't maybe come to the home office here and met our team, it's a put it on your bucket list. We got to get you out here to the conference or something. Definitely something. Definitely something to do. It's just good to meet somebody face to face, talk with them, break bread with them a little bit, and I think you'll find that we've got some great people here with our team here at US Life. So
Happy to be a
very
part of
good.
it.
What's that?
I say I'm happy to be a part of the team. It's like, honestly,
Good,
they've treated me like family.
good. Good. Well, we've got a little bit to go here before we get started. I guess we could get started. Um, yeah, welcome everyone. I'd like to uh, get started. Today we're going to be talking about tax mitigation and some of the ways that you can use tax mitigation to fuel your business, help you get up and running, be able to get to the point where you're closing some large cases. In fact, we've noticed with tax mitigation, the bigger the problem, the bigger the opportunity because there's so much money that can be saved with a little bit of forethought and connecting them with the right people. And of course, when you're saving somebody a lot of money, then one of the questions after that is, okay, now what do we do with it? And so obviously we've got some solutions along those lines as well. So what's up, Nathan?
Hey, how you doing?
I'm doing good. Yeah, I can't complain.
Yeah.
So, well, and can you kind of look through Nathan, make sure Nick's able to get connected? Okay, sometimes we send out the links and they don't have the panelist link, and we need to make them a panelist or something along those lines. So
Hey.
there may be an issue there that we can start working on. Same thing, Tanith, if you're aware. Let's see if we can make sure our guest speaker here is able to jump on.
That's Nick.
Yeah, apparently McKenna was just saying he's got a couple snafus trying to get in. So gotta love technology. There's always something. We love it when it works, but it's always a little bit of a headache. That's okay. We can get started without him. So Nick's going to be coming to us from Strategic Associates, excuse me,
Do we
which
know
is
his
one of
last
the
name?
firms that we like to work with. Um,
There's a Nick Bangle in the chat right now, or in the attendees. So
um, yeah, well, it's all right. He's on his way in.
Yeah, it's Nick Bailey.
Yeah, it's Bailey. Did you say Bengal?
yeah, Bangle,
Somebody
there's a Nick
else.
Bangle in there, but no, it's Nick Bailey that we're waiting for.
Yeah,
Okay.
yeah, yeah. And I just NIC. So yeah, I thought maybe I heard you wrong or something. I am getting old, so. No, getting onto the topic, well, first of all, before we get into the topic, again, want to always encourage everyone to come to the conference with us. I think it's just a great opportunity to come in and get trained and meet us personally. This one in particular, this next one next year is going to be here in Boise, Idaho. And so we're same venue we had about a year and a half or so ago. And just a great venue, and then a great opportunity to meet our staff, kind of network with other people that are using the Flex method. You can kind of see how they're using it. And then usually we take a pretty deep dive with trainings, kind of like this one. And then, yeah, uh, anyway, that you can get signed up for at theflexmethod.com. Kind of reserve your spot there. Um, Man, I don't know what's with my voice, but at any rate, tax mitigation. So one of the things that I noticed when I got into this industry, I had a background and expertise in exchange traded options, business, bonds, real estate, stocks, futures, currencies, all the nerdy stuff. Yeah, just familiar with that, borrowing and leveraging, just you name it, anything with a number. I've just always been interested in it. And so when I came into the industry, insurance was actually one of the last things that I actually learned. And what I noticed is there's just a huge, uh, I don't know, almost like a segregation, if you will, of advisors. You've got people that know life insurance, you have people that know annuities, sometimes a little bit of both, but you usually get specialists in one or the other. You get people that are specialists in P&C. You have long-term care and disability. That's just the insurance world, right? Then you get the stock world, and you got people that are experts at non-traded type things, alternatives. You have some that are good with private equity, venture capital, stocks, bonds. There's just specialties all around, and it's because there's a lot of things that we do. Hey, Nick. And so, same thing in the tax world. You get a lot of accountants that are accountants. They tell you kind of what happened and help line up the numbers and make sure everything's categorized and nothing's missing and that everything matches up correctly. And then you have a lot of tax preparers is really what a lot of CPAs are, that just kind of, again, tell you what happened. And then there's a rare breed that we love, which are the ones that know and understand the accounting. They are CPAs, they have the credentials, they are very familiar with the tax code, and are out there scouting the world, if you will, for good opportunities to save people money on their taxes, and think not in terms of, okay, let me just tell you what's happened, but in terms of, hey, how can we help you actually go home with more money in your pocket, and not have Uncle Sam in it picking out 40% of everything you've earned this year. So with that, what we've noticed is one of the things that people absolutely hate is taxes. They hate paying taxes. Democrat, Republican, I don't care who you are, you hate paying taxes. Everybody does. Once you start making money and you lose half of it to taxes, you start all of a sudden caring, what's going on and how you're earning the money, where it is, and start looking for ways that you can be encouraged through the tax code, legal, obviously, tax advice, to do the right things to make sure you come home with more money. So one of the strengths that, with all that being said, one of the things that I think is one of our biggest strengths is we don't try and be everything to everyone. We've got some great strategies. And these strategies work best when we're layering on experts in the different fields. So although I know a lot about taxes and how the tax code works, I'm not a CPA, and I'm not going to be able to give you tax advice on your individual circumstances in your individual state. And so that's where we bring in the tax experts to kind of partner with you, partner with your different, tax advisors and professionals, so that we can come up with a strategy that saves you the most on taxes, gets you the most in a safe way on your investments, helps you with estate planning, that helps you with your real estate, just whatever it is that you're touching financially. If we can put the right people on the team in front of you, then we can get the most outcome and benefit for you. And so, with that in mind, Nick, thanks for coming with us. I appreciate having you. Sounds like you had a couple hiccups trying to get in,
We
but
made
I'm
it though.
glad you're with us. Yeah.
Thanks for
So,
having me,
Nick,
Kurt.
you want to tell us a little bit about yourself? I
Sure.
think I see the Wasatch Mountains behind you there.
Yes.
So, and it looks like your building could literally be here. We've got the same bar here. It looks like you're in our office here.
I know. Yeah, Robert's told me that a couple times. He's like, I think the same guys built our building, built your guys's because they look the same. So,
Yeah.
but pretty cool. But nice to meet everybody. Thanks for having me on. Appreciate it, Kirk. So, my name's Nick Bailey. I live in northern Utah. I live in Logan. So if you guys have heard of Utah State University, that's the city that Logan is in. Um, so those are real mountains behind me. People ask all the time, are those is that an AI background? But no, those are the real mountains behind me. And as you can see, there's a little bit of snow. So the last couple of days have been a little chilly and ready for it to warm up. But yeah, so I live here in northern Utah. Prior to doing what I do in terms of consulting and working on the tax side of things, um, I graduated from Utah State with a finance degree. I owned a business. Actually came from the insurance world, so I know the world that you guys are living in and understand that. And so it's pretty cool that me and a lot of the other members of the team as strategic associates have an insurance background, so we can relate to everybody and what you guys are going through. And so I have that background, owned a business, but have known Roger and the team here for a couple of years and have started working with them last year actually as a consultant. And but yeah, it's been great. And I'm married, got a couple of kids, and so yeah, things are good. Can't complain. So happy to be here with everybody today. Kirk, do you want me? Oh, am I frozen? Uh-oh.
I can still hear you, Nick.
You can hear me? Okay.
Yeah.
Maybe just Kirk and Nathan are frozen. Well, let me
Yep.
start talking about the firm a little bit. If hopefully everybody else can hear me. So the firm that I work for is called Strategic Associates. Thanks for the thumbs up, guys. We are an advanced tax planning and tax mitigation firm. Okay, so we are a strategic partner with US Life that we are brought in to help you guys when you guys have clients that are facing a tax problem, okay, or need help with taxes. That's what we're brought into um, to help with. So we have a smart team. We've got a team of in-house CPAs and accountants, of guys that way smarter than me, above my pay grade, that understand the tax code and like to read the tax code. So our smart team, what they do is they help us vet out and do a lot of due diligence on these strategies that we implement with clients. Okay, so our firm, we provide access to advanced strategies and solutions that allow your clients or the folks that you're working with to be able to utilize the incentives within the tax code that allow them to legally, ethically, and morally reduce their taxable income. Okay, so that's what our firm does, is we provide education and support to clients as they're going through their tax problem. Okay, Kirk, looks like you're back. You're on mute.
Yeah, sorry about that. We usually have some really good internet where we're at, and this second time today that our internet just dropped. So, in fact, I think it's still out at the office. I'm just using my phone right now, hotspot.
Oh,
But
gotcha.
so I thought you had frozen up. I'm like, man, we lost him, and it was actually me.
Yeah. Well, we made it work. I kind of just started talking about the firm a little bit, about Strategic
Good.
Associates, who we are, kind of got into the intro about that a little bit.
Good. One of the things that I wanted to make sure that you talked about a little bit is kind of some of the, no, I don't know if you call them guarantees or not, but just kind of some of the backing that your firm puts behind any tax mitigation that you work on, how that
Yeah.
works.
Yeah, would love to share more. So our firm has been utilizing tax mitigation strategies for about 16 years now. Okay. So Roger Randy, our CEO, he got a start in the space 16 years ago back in 2010. So we've been utilizing programs and strategies like this for a long period of time. So for over 16 years, we've helped, tens of thousands of clients up to this point. Over 16 years. We've mitigated about $6 billion in taxable income over 16 years. And up to this point, we've had zero audits to date. Okay, so any of the clients that utilize any of the strategies we've used, we've had zero audits. Now, that's not to say an audit couldn't happen, right? Or an inquiry couldn't happen on somebody's tax return. Quite honestly, we're planning on it, right? And so what we've done to kind of to help with that is our firm, our warranty that we provide to your clients is that if they were to move forward with any tax mitigation plans, is that we provide audit support to them at no cost to them. Okay. And then the programs and the strategies themselves, we require that they provide audit defense at no cost to your client. Okay. So if an inquiry would ever happen, the tax attorneys actually would step in. They provide the audit defense. They provide all the correspondence on behalf of the clients. Okay. And so, like I was mentioning before, our firm, we spend a lot of money and a lot of time every single year doing due diligence on the strategies that we implement with clients. And so we have a smart team, guys way smarter than me, way above my pay grade, that guys that understand the tax code and like to read the tax code that help do due diligence on these programs to make sure that we can legally, ethically, and morally take these deductions. Okay. And quite honestly, what gets asked a lot is when we meet with clients is, well, hey, what's my risk of being audited? Well, I mean, there's a risk of being audited whether you do a strategy or whether you don't. But more importantly, what we feel like the more important questions are, hey, if I were to be audited, um, who is doing the defense? Okay, and is that deduction defendable? Okay, so again, part of our due diligence program is not just doing due diligence on the strategies and the defendability, but on the groups that we work with. Do we trust the tax attorneys, right? Have we vetted those individuals out? And so the answer to that is yes, is that we trust the tax attorneys that would be doing the audit defense, and we are confident in the positions that if an audit were to happen, that those deductions are defendable. Okay. So that we believe that, hey, if an audit were to happen, if anything were to ever get looked at, that those deductions are going to be defendable, because we have spent as much time and due diligence on these as possible to make sure that we're confident in those positions. So that's part of our warranty and our guarantee to you and your clients, is that we're going to be there every step of the way. Again, we've been doing this for 16 years. Our plan is to be doing this for the next 30 to 40 years, right? We're not going anywhere. Our firm's continuing to grow at a high level. We're in this for the long run. We're not in this just to, sell a product and move on. We're here for the long run to build relationships with you and your clients, year over year.
Yeah, no, I appreciate that. That is quite unique. We work with we work with tax people all across the country, right? We want to make sure that we've got oftentimes there's different programs that one person will have or another firm will have that we like to use. But one of the things that I've really appreciated with Strategic Associates is it's not just one or two guys, it's a team of experts there that not only when they're doing the due diligence, they can kind of look at things and maybe see something that one set of eyes didn't catch the first time. So it's multiple eyes on any set of documents. And it's also really good from a logistics point of view. I feel very comfortable sending my clients over to them because we know they're going to be taken care of. They've got a system that works, and they're very good at follow through with our clients. And so, um, you know, when we run into a client, oftentimes people are just they just don't even know. In fact, most of the CPAs out there don't even know very much about tax mitigation and how to do it, other than, oh, you've got a big profit this year, go buy another pickup truck for your business. You know what I mean? Or oh, just do more into your 401k. Well, that's good to a point, but then there's so much more out there if you're aware of it. But the problem is most CPAs don't take the time, they don't have the time to go out and find the different offerings that are out there and then get comfortable with them, because when a CPA works with you, their neck is on the line. There's some liability there, even directly with the IRS themselves, that is on the line. And so they have to be very comfortable with it. And again, let's talk a little bit about that. You guys don't actually do the filings of the returns. You guys work with other tax professionals, correct? So you want to say how that process is?
Yeah. So we're not looking to replace anybody on the team, right? So when you have a client, they've got a team of trusted advisors. You're one of those trusted people on their team, right? Typically, they also have a CPA or a tax preparer that they trust. So we're not looking to replace their CPA or their tax preparer. We're looking at just becoming a member of that team, right? And when I came in earlier, Kirk, you were talking about a tax difference between a tax strategist and a CPA, right? We want to be that tax strategist on that trusted advisory board for the client, because their CPA, they're not paying their CPA to be a tax strategist. They're paying their CPA to file their return, take their information, those type of things. And so what we do is we meet with their CPAs. We're more than happy to do it. That's my job. We meet with CPAs and tax attorneys all day long and help educate them on these strategies. So even though maybe somebody's been a CPA for 20 years, it doesn't mean that they know everything. It doesn't mean that they're aware of every strategy or every deduction that clients can legally take. And so we're more than happy to have those conversations, get on a Zoom call with their CPA and walk them through, hey, here's how the strategy works. Here's the deduction we're taking. We also speak within the tax code, right? So we can reference the parts of the tax code that the CPA is like, okay, yeah, I'm aware of section 179 or section 168, right? And they're aware of these type of deductions. So we're able to have those type of conversations with their CPA. And then in addition to that, we also provide supporting documentation to the client and their trusted advisor to help them do some due diligence on their own. Okay, so we have a data room for each of the strategies. So when we meet with a client afterwards, we send them an email with that data room. In that data room, it's going to have access to several videos. There's going to be a legal tax opinion letter from the tax attorney. So them and their CPA can read through that. Those tax attorney letters have all of the references to the tax code plus case law, right? IRS rulings that have already been made on these type of deductions. Okay, so those legal letters are very, very useful. There's executive summaries, operating agreements, all those type of things that we provide in those data rooms. So the client and their CPA can do their own leg of due diligence, review those materials, come back and meet with us again. We can answer more of the questions they have. So we're just here to help provide the support that they need for the client and hopefully their CPA to be able to feel comfortable about making that decision, to whether to move forward with a strategy or not.
And those are all excellent points, Nick. In my own experience working with my own tax mitigation, from like Kirk said, we work with several tax strategists and outfits throughout the country. There are others that would do more of a comprehensive balance sheet review and profit and loss and try to file those taxes for you with their own in-house CPAs. And it's just I've sent clients there and I've gone through that process myself, and it's a much more involved process. And I've lost clients along that process. It's very easy to kind of plug and play strategic into my own tax situation and my clients, knowing they've got all the research done, the backing, they've been on with my CPA. They don't have to take over that CPA relationship because that can be a touchy point in my own experience trying to get clients to work with other tax planning outfits. So it may not be as maybe comprehensive as other outfits, but from my angle, it's almost better that way to do more plug and play. And I know you guys maybe can speak to this too. You can technically go deeper with the clients and do maybe a CPA relationship. I think you guys have people on staff. That's not your main thrust, I think. Whereas other outfits I've worked with, they want it all. And
Yeah.
that makes a complicated handoff that has often unraveled before it ever got going.
For sure, because initially a lot of CPAs feel threatened, right? A client says, "Hey, I just met with this group. They talked to me about how I can take bonus depreciation on a tiny house, and save all this money in taxes." And the CPA is like, "Oh, I've never heard of that. Like, are they just trying to replace me, right?" And they get defensive. And so we come about it on an angle of, "Hey, we're trying to be on the same team as the CPA, right? And we're trying to work with them in the best interest of the client." So that's the angle that we try to approach. Now, that being said, not always does every accountant get on board or decide to even listen to us, right? Some of them are like, "Hey, I don't even want to entertain it." But the client is still interested. Okay. Well, in those scenarios, we do have our sister firm called Strategic Tax. So we do have in-house CPAs and accountants that in that scenario, if a client is maybe looking for a new CPA, or maybe their current CPA isn't willing to sign off on the strategy and the client still wants to move forward, we do have in-house accountants and CPAs that will work with that client and take over that relationship if the client wants to. Again, it's not a requirement. We don't even really promote it or push it that way, right? It's just kind of as an option if it's needed, in the best interest of the client.
That's great
And
to know.
that's what I was going to say, because there's some circumstances where you want that to go to somebody that's a friendly CPA that knows what we're doing. That's one of the things we like about you guys, and that isn't going to be combative. And sometimes, a lot of times, clients, surprisingly, sometimes they absolutely love and would not do anything without their CPA. And sometimes they really are either don't have a CPA or they're ambivalent. Like they're like, you know what, I've had this guy for 20 years and I can't think of the last time that he ever showed me a way to save money on taxes. Like we run into that all the time. So it just depends on the situation. So we appreciate that about strategic. So
Yeah. Ruby had a comment. If I could interject here, I think it's a good time to talk about this. What is the process when we identify tax strategies that are needed? And I think you would say don't be an expert in the tax strategies, just know enough about them to know that, hey, you need to take their pulse and see where the bleeding is. Okay, let me get you to the doctor. Let me get you to ER over here. It's strategic, right? Don't try to treat that. Get into the professionals. And maybe you can talk more about that, but how is compensation paid out? Does it get built into our designs? Cost outside the flex plan / dual purposing, etc. Maybe Kirk can speak a little more to that. And then what about continuing consultation availability? So what annual services does your outfit provide? Like, great
Sure, I'll
question,
touch
Ruby.
on,
Keep them coming,
yeah,
guys.
I can touch on 1 and 3, and I'll let Kirk handle
Yeah.
number 2 there. So on that first one, really, again, what you guys need to know, and this is why we're having this call, and we're more than happy to have more communication with you guys, is you need to know enough to be dangerous, right? You don't need to know everything. You don't need to know the ins and the outs of the strategy go sell it, quote unquote, right? You just need to know enough to be dangerous and quite honestly be able to see a problem and say, hey, let's go see the doctor, right? Recognize that, hey, somebody has a broken arm, right? And they're bleeding, right? And then let's go see and try to create a fix for that. So for you guys, really where you need to understand it, and we'll talk more about some of the strategies today so you can understand how they work, is you need to know that when you're working with clients is where it makes sense for them to meet with us and look at strategies is if they have a tax bill, okay, so a tax liability between federal and state. So let's say they live in the state of Arizona, and between federal and state tax, they're going to pay $100,000 or more in taxes. That is when we can provide solutions to help them save significant dollars in taxes. Okay. So typically the income range that falls into, now it varies a little bit if they're a single filer versus married and what state they're in, but typically it's $400,000 to $500,000 of income as a minimum. Okay. So if their net income is $400,000 or $500,000, that's typically where they're going to be about $100,000 or more in taxes owed. Okay. If they're in that threshold or above, we have solutions that can help them. Okay.
So, and one of the things to keep in mind too is if they have money that's in an IRA, an old IRA or 401k that we should be looking at potentially doing a Roth conversion with it, they may have an income that's 150,000 or something like that. But if they've got 600,000 or 700,000 in an old IRA, we can make that conversion and then mitigate the taxes. That all of a sudden throws them into that higher income bracket, and now that's something that Strategic can do something with, right? So keep both of those in mind. One of the things that can put them into that higher tax bracket and therefore make it worthwhile is when that's the situation. In fact, I just had one today that we're going to send over to you guys. That's a really good example of somebody that's got they've got a couple $1 million. In fact, I think it's my notes here. They've got $4 million. She's about ready to retire. She's 64 years old, pilot, and she's ready to retire. She's actually on disability, so she's still got some income from but it's not a lot. And so by itself, that wouldn't put her into a high tax bracket. But with $4 million and RMDs coming up soon, it's time to talk, and at least find out, right? If we bring somebody to you and you're like, this probably isn't, this isn't probably the juice isn't worth the squeeze, you know what I mean? Then we know, right? And you've done your client a service by taking them to someone that could potentially save them hundreds of thousands of dollars. We had one with you guys last year. This lady's interesting, but she ended up becoming a client. And then immediately after becoming a client, she started basically talking to a whole bunch of other annuity salespeople, basically. And out of the blue, she talked with one group and she was like, I don't know if I want to do anything on the tax side of things. She also had $4 million in an IRA, 70-year-old, I think. And out of the blue, this was kind of late summer when she's like, I don't think we want to do anything. Then out of the blue, this annuity guy convinces her to basically convert it all immediately, $4 million, without any plan whatsoever for tax mitigation. So Nick, is that a good ending to that story? Probably not, right?
No.
Fortunately, we caught her in December and found out about it. And we're like, oh my gosh, what did you do? Like, had she done it with us or through us and with you guys initially, we would have saved her a ton more. But even still, we ended up saving her. You guys, I didn't do it, but connecting them with you guys ended up saving her over $600,000. So think about that, $600,000 that would have gone to Uncle Sam that we were able to recapture. So that's a big, big deal when you're talking about somebody's financial well-being. future and stuff. And so anyway,
Yeah.
good job on that. We appreciate your help on that, especially since it was last minute. And I'm going to confess something. This has been a surprise for a lot of you that know me because I literally have a trophy sitting right over there on my whatever that's called, the little desk thing. That something about doing my taxes at the last minute, and it happened again this year. So last year, though, you guys literally we were signing papers on and filling out documents on December 31st. So I'm not going to do that to you again this year, but I do appreciate you helping me out. So
We're happy to help, Kirk. But yeah, usually, Kirk jokes, but yeah, we're usually not at the New Year's Eve party. December gets a
yeah,
little crazy for us, but yeah, because yeah, from a timeline perspective, that's part of this too. With when it comes to tax planning, I think this is a quick segue. I just want to talk about timelines. Is most people think tax season, quote unquote, is January through April, right? It's like, hey, the end of the year's over. I get to now look and see how much money I made in the year. I get to go put all my documents together, send them to my CPA. That's tax season, right? Is quarter one. Well, really, we need to have this shift and change it to tax season is really year round. Okay. We need to be comprehensive in our planning year round. And the reason that is because in order for somebody to take a deduction on their, let's use this year as an example, on their 2026 tax return that they're not going to file until next year in 27. Well, if they wait to do something in March of 27, it's too late, right? This is 2026 we're talking about. So we need to have this deduction taken place before the end of the calendar year. So for us, that's why Q4 is our busiest time of year because that's usually when everybody crams at the last second to get these deductions in to be able to take, save some money in taxes. But you guys can be a little more proactive in meeting with your clients and understanding their needs and be like, hey, I know they made $500,000 last year as a W-2. They didn't get fired, so they're going to probably make another $500,000 this year, right? Or I know they have $1 million in an IRA. Let's not wait to have this conversation December 1st. Let's have this conversation June 1st, right? And start planning about this so that we can be strategic with the tax side of things. And then, yeah, sure, maybe they don't implement anything until October. That's fine. But at least we're having these conversations in the summer months so the client feels like they have enough time to plan and understand rather than it being a fire drill the last 2 weeks of the year.
well, and then if something is last minute, then there's all this pressure and stress of it. It's this new thing. It's not the environment that you want to say, hey, you get to choose from this, or that, and then they're like, I don't know. Nick, tell me a little bit more. Let's talk a little bit more about kind of the procedure of we talked about who to look for and kind of what to keep your eyes open for.
Yeah.
We want to make sure that people, because if you're not a tax professional, we want to be sure that you're not giving tax advice, right? And that we're connecting them in a way that's that introduction is helpful and at the right time and in kind of the right order. You want to talk to that a little bit?
Sure. Yeah. So again, you guys need to know enough to be dangerous and have these conversations. And so I think the best way to approach that is maybe you're talking to a new prospective client, right? Or maybe you're going back through your book of business and Kirk just brought up 401ks or IRAs and maybe there's alarms going off in your head to be like, oh man, I've got this client that's 59 and a half that has a bunch of IRA money. I need to go talk to them about that, right? You're probably thinking of clients that you have that what you need to go and talk about is, hey, really get to know them, right, on personal what you guys have. But then, hey, Mr. Client, are you getting killed in taxes, right? And if they say yes, then you can be like, okay, well, are you paying more than $100,000 in taxes or less? Oh, you're paying more than 100. I'm paying way more than 100,000. Okay, well, we actually work with a firm who's advanced tax strategy firm that helps clients like yourself save money in taxes every year. Okay. And then the client might be like, well, what are some of the things that they do? Like, right, you don't really want to get into too much of the details, but you could just be like, hey, yeah, some of the, at a high level, they use strategies like bonus depreciation. Most people have heard of bonus depreciation, right? Or they use charitable gifting type strategies, right? Those type of things are pretty common that people have heard about. It'd be like, hey, but again, my job isn't to teach you or tell you about these strategies. Let's set up a call with this firm, Strategic Associates. You guys will have access to our booking link, right? And you guys can be able to book those calls, and then we can be brought in and help walk the client through their scenario. So that's kind of the way that I'd approach it. And same way when you have a client that maybe has, a 401k or IRA money that you're like, man, I would really like to help them convert that. Let's go put it into a flex method policy, really go let that money grow tax free, right? But then the client's worried about the taxes they have to pay. Well, if we can help them realize how much they're going to save in taxes, right? When they do this, well, that's going to help them make that decision on, rolling that money over into do a Roth conversion, so to say, right? And so this is just a part of that decision-making process. But those are the things that I would look for is, hey, ask your clients, are they paying more or less than 100,000? And then just be pretty, hey, we work with a firm that helps clients like yourself save money in taxes every year. They're an advanced tax planning firm. Let's get on a call with them and they can walk you through the details. And then you just book a call on our calendar.
And what a great way to get your foot in the door as well and provide value instead of coming in there saying, hey, I've got this thing to sell you called life insurance or, whatever it is. Going in there and saying, hey, our team helps provide value. We help people save money on their taxes. We help them invest. There's all kinds of things that we do. And then from a compliance standpoint, you don't want to, let's say I'm an insurance only licensed agent, right? I don't have a securities license and I'm not a CPA or tax professional, right? Tax attorney. So if I go in there and I already know based on the situation that, wow, this is a great candidate to do a Roth conversion and to go into life insurance. Okay, you might know that, I might know that. But the moment you go in there and you say, hey, I want you to sell these securities and buy a life insurance policy, you just gave investment advice. And oh, I think you also need to convert this to a Roth. Here's the tax implications. You just gave tax advice. So that is a good way to lose your license and to not be in business anymore. And so, and you don't have to be the professional, right? It's the whole point of having the right team members is to go in there and let people know, hey, this is the kind of stuff that we do. I have a good idea how taxes work, and I have a good idea how the securities piece works. But I'm going to bring you to, I'm going to bring you and your CPA or your accountant to some tax strategists that actually have all kinds of ideas and ways that they can help save your clients or save you some money on your taxes. And sometimes it's a big dollar amount. Oftentimes it is. And so, somebody's got a business that they're going to sell coming up, and get ahead of that, get in front of that sale, right? All kinds of different tax, they got a property they're going to sell. They've got some securities that they're going to sell. There's all kinds of different things that trigger tax events, and you don't have to be the expert. You don't have to give the advice. You just need to let them know there is probably some significant things we can do here. Let's get you to the right team and let's find out, right? You're not saying you're going to or anything like that. You're just saying, hey, let's find out what they can do. And those are usually some really good conversations. And from a compliance standpoint, you definitely want to stay out of giving advice on taxes. So.
And Kirk, something I'll add to that too is, again, you're just making an introduction to us, right? You're not getting into the weeds, right? You let us do that, right? Let us be the education piece when we meet with clients, and then ultimately we're going to present them options. And then at the end of the day, the client still needs to decide for themselves, right? Whether they do this or not. And if they work with us, great. That's awesome. And if not, no worries at all. We're not high pressured. We're not going to twist anybody's arm into anything, right? Especially with these type of strategies. And so something else that I feel like comes up often is, well, people will be like, maybe they're hesitant to meet because they're like, well, oh, I've heard of other tax planning firms and they want to charge me a consulting fee, or they want to charge me a planning fee every single year I work with them, or a percentage of how much I save them in tax. Just so you guys know, we don't charge you or your clients anything to meet with us. Okay. And this kind of maybe goes back to that question, Nathan, that you read in the chat. There is when you and your clients work with us, whether it's one time or whether it's year over year, there's no planning fee that the client pays, right? We'll meet with the client. We'll do as many Zoom calls as the client wants or needs to feel comfortable. Okay. We'll go back and forth with their CPA as many times as possible. And so we've structured it that way where our firm, just so you guys understand, because you guys are like, well, why are you doing that? How are you guys getting paid? We get paid from the strategy itself. Okay. So we get paid kind of like when you guys write a life insurance piece of business, you're getting paid on that. Same way here, we get paid from the strategy itself. So we're not charging a client a consulting fee, a planning fee, anything like that. So there's really no risk to the client to even meet with us and just explore what their options are. Right? We're just here to educate, showing them what their options are, and ultimately they make the decision for themselves.
Very good.
On that note, it's interesting you guys have been doing this for 16 years, and in my experience, there's always a little something to do on previous strategies that I've done, some reporting or something like that, that would need to come from your office or GFX, and in the case of my SOP, for example, that you might explain later. Your team is going to be involved in maintenance on an annual basis in some way, shape, or fashion. And granted, I've been blessed to need tax mitigation every year on income, but some clients are going to be like Kirk, not like Kirk, but like Kirk was referencing, where they're going to have that dump from qualified money, right? It's going to be that one-off situation.
One-time thing.
Yet you are going to have an annual maintenance of that. But I think it's comforting that you've run this for 16 years and you know what those costs are, just like we know with the Flex method, there's an annual cost. And so when people complain about commission, for example, not being, I want more commission, they need to understand the legacy cost that goes into running the Flex method. As I'm sure there's some maintenance cost in Strategic Associates. So there's just some food for thought out there that's interesting. There's not an annual maintenance fee or something like that built in.
Right. Yeah, we're not charging the client anything like that. And to your point, Nathan, there's a team of people behind me. So I'm one of 5 or 6 consultants. Okay, so when you guys book a call with us, you're gonna get me, or if you guys are lucky enough, you're gonna get somebody else on the team. But you're gonna get one of us that gets to work with you and your client. Okay, on the consulting side. Behind us, we've got about 25 additional staff members who help us in terms of like a white glove service for the client. Okay, so the client decides to move forward. We have somebody that's going to walk them through, hold their hand through the process to make it as simple and as easy for that client in terms of implementation on putting everything in place. And then some of these strategies, like you brought up, Nathan, is there are additional years, there are things the client has to do. And our team is here to support them in that. Always there to answer their questions, help them walk them through that year over year. So we're trying to keep it as simple and as stress-free for the client, because again, especially for clients doing it for the first time, it can seem like a lot. It can be a big decision. So we try to make it as simple as possible. That's why we have as many amazing staff members as we do have, is to make this a great experience for the client. And to be honest, that's why the majority of clients we work with are year over year. We obviously have the one-offs, right? Clients have a 1-year taxable event, but the majority of ordinary income earners work with us year over year because we try to make it just a great client experience all around, which makes it great for you guys too. We take all the heavy lifting off of you guys. There's nothing you have to do. We're here to help the client.
Yeah.
And with that, you guys are looking for opportunities to funnel back to Flex method strategy planning and things like that too. So that's appreciated. We're sending it to a black hole that we never hear from again. There's a question kind of going back to what you said, Nick, about that process of how to get you guys involved, the onboarding or intake form, or what is the best way when a client says, $100,000 tax burden, I know what to do. What's next?
So we have a round robin booking link, and I could put it into the chat if Kirk, if you want me to, or we can send you guys could send it out afterwards, whatever you prefer. But we have a round robin booking link that when you, hey, I have a client, I think they would be great to have you guys meet with them. You just use that link, click on it. It's going to ask for the client's information. It's then going to ask, so like their name, email, phone number, the basic stuff. It's also then going to ask for 5 pieces of information. This is what we need to know so that we can actually help the client in the best way possible. So first, we need to know their filing status. Are they married, filing jointly? Are they single filer? Second, we need to know what state they're in, right? Because each state has different tax laws. So we need to accommodate that. Then the third thing we need to know is, do they have any net business income, right? Are they getting a 1099? Are they getting any K1 income from a business they own, anything like that? And then we're going to look at non-business income. Okay, so that could be W-2 income. It could be rental income, so anything non-business related. This is where that IRA or 401k money comes in. So you have a client that has $1 million in an IRA, you're going to put it in that non-business income category, okay, when you fill out that form. And then the fifth thing we need to know is if they have any capital gains, right? So maybe you have a client that just said, hey, I just sold a piece of property, right? And they have $1 million capital gain, or they just sold a bunch of stock, or anything like that that could create a capital gain event. We're going to ask if they have any capital gain income, because all 5 of those things are going to flow into their personal tax picture. And those are the pieces of information we need to know from you guys so that we can best help the client.
Very good.
And Kirk,
One of
that's a
the-
good
one of
point
the
about they're
questions-
asking about how to get connected with Strategic. So if you could shed a little light on that, Kirk.
Yeah. So let's do 2 things. There's also a question on compensation, things like that. The answer is it depends on various factors, like who you're with. It's complicated. So the best thing to do for both the link for the intake and getting there is to contact your consultant, and then also talk to them a little bit about the any kind of compensation. And how the compensation works. One of the other questions that's in there too that we wanted to get to, I don't think we got to it yet, was, is there anything we can do to reach back 2-3 years to be able to kind of recapture some of the taxes that have been paid over the last few years?
Yeah, great. Thanks for bringing that up, Kirk. So, yeah, let me talk about prior year strategy, and then I'll maybe kind of give us and then lead into maybe an overview about some of the other strategies we work with. So,
And we may not have, I don't know that we're going to have a ton of time to be able to give an overview, but
Okay.
just kind of give a conceptual of some of the
Just-
stuff you do,
sure.
if there's stuff you can do to reach back.
Okay, perfect. So just conceptually, our strategies are going to fall within one of 4 categories. Okay, so we have business creation strategies where you know a lot of you are familiar with, like when we start a new business or create a new business, there's deductions that come with that. So we're creating a new business. That's one category. Second category is business deductions, right? You already have an established business. We're taking deductions within that business. Okay. The third category falls under charitable gifting. Okay, so we have programs that utilize charitable gifting and receiving a deduction from that. And then the fourth category is going to be tax credits. Okay, so we have some options within that. So within each category, we have different strategies and solutions depending on the client's needs. Okay, we're going to always work what's going to be best for them. We're not going to try to fit a round peg in a square hole, so to say. All right, now one of those credit strategies is a solar program that does allow us to go backwards. Okay, so the way it works is with these credits, that ultimately there's enough credits that get created that they can't utilize all of these credits in the current year. Okay, so there's going to be an option where the client has is they could elect to take these leftover credits to go back to prior years to recapture some of the overpaid tax. Okay, so we could go back to 2023, 2024, and then 2025. So we can go back 3 years, and it does require that we have to go to the third previous year first. Okay, is how the IRS has structured that. Now, just so you guys know, the minimum on that one, I know a lot of these other strategies, like I mentioned, the minimum is 400,000 to 500,000 of income. For the solar one, it's slightly higher just because of the cash outlay. So where that one makes sense, where the juice is worth the squeeze, is if somebody has $1 million of income. So if they have $1 million of income and they want to go backwards to recover some overpaid tax in 23, 24, 25, then we do have an option there through our solar program.
Very good. Is there any examples you want to talk about, or any stories that would kind of illustrate the types of things that you're able to do and the effect that you have on
Yeah.
It
Yeah.
might be helpful to address Rudy here. She says,
Oh.
for example, there's a client with a future inheritance of a multi-million-dollar cattle ranch, or another client with inheritance of family oil fields. So how do you position them to successfully inherit that? Do you do any DST planning, or is there some other method you would go about that?
Yeah, so typically with like inheritance like that, right? Depending on how much they're inheriting, right? There is if they're below the limit, right? If they're below the inheritance limit, then there's not going to be they're going to get stepped up in basis, right? And so there's not going to be taxes there. Um, but if they are going to have, let's say, a capital gain event, right? I know Kirk, when I was talking to Robert yesterday, he told me to maybe have you share about the Tesla example um, with that client you guys worked with. But maybe you have a client that had a bunch of stock that they sold and created a capital gain event, or they have a piece of real estate and they don't want. Maybe you have a real estate investor client and they own a bunch of real estate and they're getting older and they're like, I just don't want to deal with. We do this all the time. I have a client list last week that did this. They're older. They don't want to deal with buying another rental property, doing a 1031 exchange, and having to stay in the real estate game, right? They just want to get their cash and be done and move on to something else. So we have a strategy that we call it's our 1031 alternative, where essentially it's going to mitigate or reduce their capital gain tax, right, on that sell of real estate or the sell of the stocks, right, that created that capital gain event. So we do that all the time. That's a pretty common case study that we utilize on capital gains. Another one that we use a lot, and I've worked with several U.S. life agents on these, is we'll have a client in their 60s that is close to retirement or in retirement age, and they're making 100 or 150,000 a year, but they have $1 million in a IRA. Right. I helped an agent out a couple of weeks ago. We met with the client about this. We're going to finalize it at the end of May, but she had about $800,000 in an IRA that we actually broke it down over a 2-year period to go fund her flex method policy with. Okay, and converted that money. Worked with her whole team on doing this and used one of the strategies to mitigate the tax on that, right? And she was making about 100,000 a year in ordinary income, but had $800,000 in an IRA that was converted, put to a flex method policy, and we were able to help mitigate the tax. And so it was a win-win for the client to be able to do that, right? And so that's a really common scenario with these IRA conversions. And then, obviously, an ordinary income, we'll have business owners that they know that they can do things, but a lot of it too is we have high W-2 earners who, as a W-2 earner, they've been told their whole life, oh, you can't do anything as a W-2, right? You're stuck. You just got to pay the tax. Well, just so you guys know, if you have W-2 clients, we have solutions for W-2 income that can help too. So again, we work with a lot of W-2 earners as well.
And I think going back to that land thing, passing on from one generation to the next. So correct me if I'm wrong, but we're talking. We may be talking about two separate things. In some ways, there's estate planning and building out the right business structure, the right structure to pass that along without having a whole bunch of taxes. So that a lot of times is going to involve some different trusts, some attorneys, those types of things, and those types of vehicles in order to make sure that legally what you think you want to have happen actually does happen. And then two, keeping an eye on taxes in the process as well. And so in those situations, that's oftentimes going to involve some tax strategy as well as some estate planning, and some of the things that we do with life insurance. That's one of the powerful tools of the life insurance policy. And so that type of planning, that complex planning, oftentimes involves multiple professionals. And anyway, it's well worth what you're able to do for people when we bring in those types of strategies. People have no idea. They just think, oh, I just sold my business and I'm so excited because I got this big payout, and they're not realizing that one of their biggest partners ends up being Uncle Sam, and they just gave away half of it, just because they weren't thinking about it. They didn't know that there's stuff you could do. One of the other things that I wanted, before we kind of close off, because we're kind of coming to the end, one of the things that I always like to talk to my clients about is the tax code. We don't look for loopholes. We're not trying to find some secret thing that nobody knows about, and we've tracked the code of how to never pay any taxes. That's not how that works. The tax code encourages certain behaviors, and does that and encourages those behaviors through tax mitigation and saving money on taxes. Just like, hey, the government wants you to put money into your 401k so you save for the future. In order to help you do that, they encourage you to do that by not having you don't have to report that income or the amount that you put into it as income and pay taxes on it. Well, it's an incentive. It's not a loophole or anything weird. It's just an incentive. And so, but there's a fine line between, I've heard some crazy things out there on how to save money on taxes, and even people like declaring like, oh, I just have to be this sovereign citizen thing, and now all of a sudden I never have to pay taxes again. And there's all kinds of things, everything from the totally ludicrous to stuff that sounds very legitimate, sounds completely, they're quoting tax code and stuff like that. And if you aren't a tax professional and you're not an expert at it, you can get yourself into trouble introducing these types of things. And especially if it works for some and not in others, and you don't know the difference between when it works and when it doesn't, right? So again, don't give the tax advice. Just connect these people with a firm that you can feel comfortable with, knowing that this is a team. They have been around a long time. They've got experts. They've got some of those warranties in there to make sure that they're going to back up everything they're doing. So one of the things that we loved about coming into contact with you and some of the other providers we have, we just don't work with somebody that's a hack or that we can't trust. And so anyway, I appreciate you guys and what you've built there and what you've done. So
Thanks, Kirk. We appreciate you guys.
yeah. Well, thanks everyone. I know we probably didn't get to everyone's questions, but that's why we have consultants, right? You can talk to them and I get connected to them, and we can help get you some of those answers. So thanks for being here with us. I really, I can't emphasize enough, this needs to be something you should be talking to your clients about, at least even just to make them aware that it's here. Because even if they're not in that circumstances, let's say they make $80,000 a year. Okay, well, maybe they're not a good candidate for working with Strategic, but guess what? They have parents, they have siblings, they have neighbors, they have friends. If they know that we can help save them a bunch of money on their taxes, when that conversation comes up, they're going to know who to send it to. So anyway, great marketing tool to be able to go out and find new business and close some big cases. So, all right, Nick, again, thank you so much for joining us. And
yeah, thanks for having me.
Everyone for being here with us. So take care, everyone.
Thanks, everybody.